FuturesTradingSignals2-15-2011.mp4. This is your host and head trader, Avier. Today's date is Tuesday, February 15th, 2011. And let the games begin. Our VCBS DJ 3.19 is generating our first long signal for the day for the Dow Minis at a price of 121.91. Once again, we have a long signal generated at 121.91. We have an initial stop. We have an initial stop placed at 121.86. That will give us a 5-point risk. Can't get any better than that. We're trading a 12,000 point vehicle. The Dow's trading at 12,000 and change, and we only have a 5-point risk. I consider that a perfect risk. It's a little tight, however, it's not too tight. I'll get deeper into the meaning of perfect risk. Well, here we go. We have a second signal for the Russell 2000 Mini long at 822.9. Once again, second signal long at 822.9 with an initial stop at 821.4. That's a 1.5 point risk. Once again, we have a long signal for the Russell, and we are still currently long for the Dow Minis, which are currently trading, by the way, at 122.10 as I speak. Well, the markets are holding their ground. There are a slew of economic numbers for today's date, most of which do not have any significant weight in the markets, but are more like precursors barometers for any near-term impending change. Okay. Here we go. We have our Dow reached a high and reached a price of 122.14, basically giving us a maximum potential profit of 23 points. 23 points with a 5-point risk. Not too shabby. As I was saying, the economic numbers that are coming out today are basically don't really weigh heavily on the markets. Now, an example of an economic data that does weigh heavily on the markets would include unemployment numbers, for instance, or the Fed's interest rate decision. These type of economic numbers that people wait for weigh extremely heavily on the markets, and we tend to stay away, especially during the Fed's interest rate decision. It's a good time to stay away from the markets due to the extreme volatility. I mean, you don't want to get caught up in a trade where you're where there are extremes involved in both directions. Then you might as well just take go to Atlantic City and bet on red or black, because that's basically what's happening when you are playing or you are trading during these types of economic number data. I highly recommend or suggest that you stay away from the markets and let everything play out when you do decide that you want to get back in. However, I would just steer clear. Now, our Russell reached a price of 823.7, which gave us 0.8 points. That's $80 per contract. The third signal, now we have a short for the Dow at 121.93. 121.93. So I just want to point out that one of the beautiful things about these particular signals that we do get generated from our system, we basically only trading on average 3 to 5 signals per day, which eliminates over trading, eliminates slippage costs. I can't explain to you how much of an advantage there is to having your trades limited per day. It's very easy to get caught up and make 50 trades, 100 round turns per day. That could be quite costly and have a huge impact on your bottom line. That's one of the beautiful things about what we're dealing with here. We don't have any of that. I mean, we're dealing with 3 to 5 trades per day. And here we go. And the Dow reached a price of 121.89, giving us a potential profit, maximum potential profit of 4 points. There you have it, ladies and gentlemen. There's no fluff. This is the real deal Holyfield. This is the real deal Holyfield. We have a long signal for the Russell 2000 minis at 822.5. 822.5. Okay. We're long 5 contracts. Just want to do a quick recap. Our first signal for the day was the minis, the Dow minis, and we got 23 points out of that trade. The first signal we had for the Russell 2000, we had a maximum potential profit of 0.8 points. So that's 2 for 2. The third signal we had was for the Dow. It was a short, and our profit was 4 points on that trade. And we're on our second, or should I say the fourth signal of the day for the Russells, and we're long. This is the second, this is the fourth signal in total, but the second for the Russells. And once again, we're long at 822.50, and we have our initial stop at 821.20, which is 1.3 point risk. Let's see now. I'm going to offer one contract to sell. We're going to offer one contract at 823.10. So I'm offering to sell. Oh, look at that. We sold one at 823.10. I'm going to offer another one at 823.20. I'm going to offer another contract at 823.20. And they took it. We sold it. We sold our second one at 823.20. We have 3 contracts left out of 5. We have 3 left out of 5. I'm putting an offer to sell one. Oh, look at that. I think they just took me. 823.50. We just sold another one at 823.50. We have one more left. One contract left. And the reason why I'm exiting most of the position here is because we might put in a double top. See, if you're looking at the previous high from the last run up, this might be a good sticking point. Well, we're going to let it ride. We'll see what's going to happen. I'll offer one at 823.70. We're not going to get greedy here. I always offer it a little below the last high point for the simple reason that it might not reach there. It might go through it. It might not even, you know, but I like to be taken before, I like to be ahead of the crowd, per se. We sold the last one at 823.70. So that's going to leave us a total profit for this particular trade of $450, ladies and gentlemen. $450 on this particular trade. Now, if I'm going to do a recap, we took from the Dow, we took 27 points, and we took 2.2 points from the Russells. 2.2 points. A recap for the day. All of our trades were profitable, as you can see. You can navigate the website for all the trade signals that are generated throughout the day. So basically, all of our trades are recorded for everyone to see. If you navigate through our homepage, you will also see under Trade Signals Archives section for our spreadsheet analysis and all our spreadsheet data. And that data is going to include the Russell Mini 2000 and the Dow Mini futures contracts with all of our trades throughout the days. The time of our trades, the length of our trades, the maximum potential profits, you know, whatever statistical analysis we thought were relevant for everyone to look and see exactly what it is that we're offering, and we must say we're very proud of what we have to offer. This far exceeded any of our expectations. I believe we have another signal setting up for a short on the Dow. Yes, indeed. We got a short at 121.99. 121.99. Initial stop is 122.10. Initial stop 122.10, giving us an 11-point risk. We've been having some pretty good risk-reward ratios on all our trades today. Well, I'll get into the risk-reward ratios at a later time. But as a rule of thumb, risk-reward ratios are typically 3 to 1 or between 2 to 4 to 1. In other words, if one risks 1 point on a trade, then one should make at least anywhere between 2 to 4 points on that trade. So in other words, if you have a stop, you put off a trade, you have a stop of 1 point, you're risking 1 point, basically you should make out of that trade, you should expect to make anywhere between 2 to 4 points. Another good rule of thumb, as far as risk is concerned, is not to risk any more than 2% of your capital on any one trade. I'll get into more detail. Let's see now. Well, the price reached a low of 121.67. We reached a low of 121.67, which gave us a maximum potential profit of 32 points. Now that's a risk-reward ratio of about 3 to 1. This concludes our session for today. We hope you enjoyed today's session and are looking forward to tomorrow's. Same time, same channel. And this is your host and head trader, Avi A. Thank you.